1st of September. Very funny feeling that'll be a time by degrees day. Maybe tomorrow. Maybe tomorrow. If you don't know what I'm talking about, I fully understand. And I am just waxing lyrical, to be fair. All right, what are we doing today? We're going to have a look, as always, at gold and see if we can come up with a trade for the Open of London session. Let's see if that's at all possible. Okay, and here we have the 1 hour gold chart. Welcome to those of you here for the first time. It's good to have you here. And what we attempt to do at this time of day is set up for a breakout trade on gold versus the dollar. As you can see, big movements on gold versus the dollar there yesterday, given that we bought into the Federal Reserve announcement, and looks like the announcement completely wiped out all those gains. Would have been tough to trade. Let me see, would that have been a winner? Yes, no, it would have been a loser yesterday, I would think, had we traded that, because there was the low, there was the entry bar, bang, see you later. So that would have been a loser yesterday. Let me just open up a couple of charts. Hi, Danny. Today, what have we got? Well, the range that we seek to break is bounded by Asia session, basically, and up to the current candle. Asia session begins on the second bar of the day, which is that one. So the high of the session is going to be indeed that bar right there, where we opened. So there's your high. The low is currently here. I can't imagine it's going to change in the next minute or so, or next couple of minutes. So what we're attempting to do is catch the breakout, whether it be long or short. And for that purpose, we enter a long order and we enter a short order. Now, whichever one triggers, we cancel the other. But what we've got to work out, is it worth doing? So we're using pivots or obvious levels of support and resistance for our targets. So in other words, if we entered short here, we'd be looking to exit at the weekly pivot. If we entered long here, we would look to exit at the daily pivot. So we would work out whether that is really actually worth the exercise. So our risk would be about $7. Our reward, if we bought, would be about $4. So not fantastic. Our reward, if we sold, would be about $5.50. That's not too bad. I'm inclined to take the trade. What did I say? 7 for 4 up the top. 7 to 4 on. Yeah, it's not fantastic. And 7 to 5.5. Not awesome, is it? But we will trade it. We will trade it. Is it time? Very close. I like the fact that we're in the middle of the range. That makes a big difference to me. If we were up near here, I think it's quite possible that we get taken in, then price comes straight back, and vice versa down the other side. So let's set the buy order at the moment. We're only trading this at 0.25%, guys, because we are not yet completely happy with the parameters, or the trade management rather. So the entry level is going to be 1931.2, 1931.20. Stop loss is going to be 1926.90. 1926.90. And the take profit will be, as I said, the daily pivot, which is at 1935.2. 1935.2. So $4 for a, well, it's not that bad. Okay, so the long is in the market. Okie dokie. Now we place the short with exactly the same risk parameters. This time a sell stop. It is a bit tough, Danny, but we'll go with it. Pending order, sell stop. As always, if you're not comfortable with it, don't do it. It's pretty simple. Selling at 1924. What was the level? I must have had a wrong level in there somewhere. 1924, the figure. Let's go with that. That doesn't sound familiar. And stop loss. That's why I've got the stop loss for the long here. Should be down here. I'll fix that. Stop loss for the short is 1931.20. Whoops. 1931.20. There we go. Take profit on the short will be the weekly pivot at 1918.5. 1918.50. All right. There we go. That one's in. I've got to fix the stop loss on the buy, don't I? Modify. Stop loss 1924.00. Modify. Okay. That looks much better. All right. So entering here, stop loss for the long here. If that doesn't trigger and the short does, we're entering here. Stop loss for the short will be here. Can I see that? Yes. Okay. Stop loss for the short. Can I see that? I can't see that. Take profit, sell stop, buy stop. Okay. It's good. Righto. If I was trading gold today, what would I be likely to do? Ooh, big reversal bar there from yesterday. You would have to concede. So I'm bearish anyway, so I don't need much talking into it to go short. But I suspect that we might be visiting this area again before that happens. I'd probably be a little bit inclined to stay out at this point on gold. All right, update. Those of you who have been trading with me, very mixed bag, I'd have to say. Firstly, euro yen. I attempted to buy this yesterday, pursuant to coming off the bottom of the range and entering above that former resistance level. There was my entry there. I got tipped in, and that's about it. That's as good as it got. And now we've had that big retracement, well, big sell-off, really. That really hasn't done too much. And I'm reticent to go back in. And the reason is because we've got the Bank of Japan tomorrow with their interest rate announcement. And despite the fact that Forex Factory is telling us that the economists are tipping no change to the negative 0.1% that the Bank of Japan has in place, there is a lot of talk around, well, there was a lot of talk around, I don't know if there still is a lot of talk around, that the BOJ was going to come out of negative interest rates, which, and of course, timing's everything. So if that were to happen tomorrow, then you would see euro yen crash. But if it doesn't happen, then this range is likely to be filled, in my humble opinion. Not real keen to re-enter because the market is not telling me exactly what I need to see right now. Not if that was a decisive bearish bar, today's candle, tomorrow I would look at it and think Bank of Japan decisions don't do anything until it happens. And that's what I was trying to do. I was trying to get safe in the market before the announcement. It failed. That said, we move onward and upward and move on to CAD versus the Swissy. Now, this is in a very similar position. In fact, I think we've got Swiss news out in about 20 minutes from now, about 25 minutes from now, which is, of course, their version of interest rate announcement and, of course, their monetary policy statement. Danny, it's a personal thing, but I believe right now that I'm going to wait until the BOJ. Yes, that's what I'll be doing. CAD versus the Swissy. Now, I was very, very tempted this morning to actually take this off. So not cancel it, but take the money and run and put an entry above yesterday's bar, if you understand my thought process. So get out where we close in the middle of that doji and then put another buy entry above yesterday's bar. I didn't do that. It's too late to do it now with the Swissy news coming up. This is likely to do one of two things. The Swiss announcement, of course, as always, two things seem to be the way we talk, isn't it? I think we're going to hear if the Swissy don't raise interest rates, and I think we're going to hear if the Swissy do raise interest rates, if the Swiss National Bank, that is, do raise interest rates. So stop loss is going to get hit, in my opinion. If they do raise interest rates, we shall see. I've trailed the stop right up to here so that if that is the case, at least we walk away with some decent money in our pocket. So doing nothing at the moment on CAD versus the Swissy. Let's see how that all pans out. Ash, how you doing, mate?
Yeah, going well, mate. Going well. Yeah, interesting to kind of hear your thoughts on that. I haven't got the same guts as you, and I have closed my position.
Yeah.
I mean, mine came a long way. I mean, it was a great trade.
Yeah, you got in before me.
I got in slightly before. Do you know? And the reason that I've closed my position is threefold, actually. Firstly, the CAD versus the Swiss has come a long way.
Yep.
And the amount of times that it kind of gapped down in the morning and continued higher. What there's one I can see on that. In fact, there's
every time
run. Every time,
time.
Yeah, gap down and just went.
Starting from here, down, up, down, up, down, up. Oh, sorry, there was a little gap there. Down, up. You know.
Yeah. Didn't really get that gap yesterday. So the first thing is obviously the run. It's been very aggressive to the upside, and I think some retracement is. I agree with you where it's going. I think there's no question. Things don't tend to go in a straight line, but you have seen this one with pretty high volatility. So it's a possibility that that this does that. The second reason that I have taken my position is because, and now don't get me wrong, I would re-enter if we do get that retracement. The second reason is because yesterday's move overnight in global assets was negative. All but the FTSE actually pretty much has just kind of come off a little bit.
Was that Fed driven or
and that
otherwise?
was Fed driven. Yeah, that was Fed driven. So the Fed is basically suggesting global growth is going to get hammered for some time longer. It surprised me. I've got to be honest. It's very difficult to kind of like put down the reasons that things move. But when you kind of read articles of other people's opinions of why they've moved, the opinion in the market is that now all of a sudden they think that the Fed are going to keep interest rates higher for longer, and that even though they're not going to raise, it was like a hawkish hawkish pause. Even though they're not going to raise interest rates, that pause will suggest that we're going to get a diminishing global growth. That pushes us towards things like the Swissy. So the Swiss and the yen as kind of risk-off currencies would suggest that, you know, things against the Swissy would probably do pretty badly. So I quite like the Kiwi Swiss. I quite like the CAD Swiss, both for downside. So, you know, if I wasn't in the trade, I'd be looking for shorts against the Swissy. I'll be looking for a long in the Swissy at this current juncture. So that's the second reason. The third reason is because the connection with growth and the particular country. So that, you know, the Swissy is one reason that I think that we're going to see a rally in the Swiss because of global concern. The second reason is because I think this has come a long way, and the third reason is actually to do with the CAD, the Canadian economy. I think the Canadian economy could get actually quite badly battered if we do see a reduction in activity. We've seen oil come off a little bit as well now. And that probably suggests that the CAD may well also come off as well. So I'm interested in the shorts with this one, mate. I think timing a short is difficult. I'm actually quite keen to take a short here, if I'm honest. I'm tempted to take on a short here, but it would just be to trade the retracement, and I might well do that. That my only thing is that we do have news, and we're sort of, you know, we're going to be trading before that news announcement comes out, and then possibly reliant on whatever the data point is. I'm not super keen on that. I prefer a sort of benign period, really, to try and get in, almost anticipating what's going to happen. Give yourself some space, and then the news kind of announcement come out. But on this one, we're right on top of it, and that might push me against it. But I like the CAD Swiss short, you know, as we speak. I like the price right now as we speak, with a stop at the high of the Wednesday's bar. Sorry, Thursday today, isn't it? Tuesday's bar. So
makes perfect sense. Not all of those fundamental things went through my head, but the technical situation is very clear to me that it is. It's binary. It's either going up there or down there. And
absolutely right. Absolutely right.
I'm willing to play that risk because there's really no risk to me.
No, and you know, when I'm looking at this, when you say it's either going down there or up there, and where that in a way where that stop loss is probably where it's going to, isn't it? And in and around that area is, if it goes down, is where it's going. I
thought there is the first stop, right there.
Okay, yeah.
Which is why I've got it here. So I'm giving it a chance to come down before it goes.
Yeah. See, do you know, one of my problems with going short here is if you kind of go in a bit on an hourly, on an hourly chart. One of my problems is if you now bring up the crosshair tool and just have a look at the pip value from where we are now to the high, and then where we are now to where we what's that?
You got 340 pips.
340 pipettes, so 34 pips. And then if you sort of like take that entry to a potential profit taking area
on the short.
On the short, yeah.
Well, where's your first profit area here?
Well, probably where, down right the way down, where your stop is. Where your stop is would be okay.
Yep, 40.
It's just not worth it. I don't see that as a worthwhile position to get in before news. Before news, it just sort of like you're on a 50-50. You're kind of on a bit of a hiding to nothing with that one. So so that's what's putting me off taking on the position there. I quite like the Kiwi Swiss, you know, for a short, and where I prefer
good economic data this morning.
We did.
Very good economic data.
We did. Yeah, it was a strange one actually, because the Kiwi sold off after you know, off the back of it.
Indeed, and I was pretty pissed off with that, to be honest, because I was very keen on Euro Kiwi long because of this area.
Yeah, I agree. I was looking at that,
and now I'm in a real quandary because of the news and the reaction to the news. So I'm just very hesitant to trade that at the moment. But 4-hour chart might be interesting because we've broken that trend and come back and retested it. So it is quite interesting.
I'm in complete agreement with you. And actually, interestingly, when it comes down to the Euro Kiwi long, that's what's pushed me towards the Kiwi Swiss short. And again, it's sort of like to do with the environment. The euro is still kind of associated with some growth, where of course the Swissy isn't. Now, if we are looking at sort of lower growth, I want that daily pivot. That's the area for me. Daily pivot looks an area of interest, and probably if it goes up there before the announcement, I'll probably take that trade. But the euro, the daily pivot looks like the thing. Now, Simon put on a really interesting analysis on this on look at that on Monday. Could you put on I think it's a 20 period EMA?
Oh, I'm allergic to those things, but I'll do.
No, I mean I like them, but this is something that Simon showed us actually last week in the trend.
Here we are.
Yeah.
Ready?
20 would be great. Yeah.
Doesn't matter, simple or
exponential.
Yeah.
I'm pretty sure it was this one.
That's a daily chart.
No, it was the daily. Yeah, it was the daily he had on. Let me see if I can find out which one it was. It might be the 50.
Well, it has respected it being and now it's above it.
Yeah, now it's above it. It wasn't that one then. It was
okay.
Maybe it's the 50. Yeah, the 50. I think it was a 50. Yeah, it's a 50.
Bang. Hasn't been there for a while, just broke above it.
Yeah, it just broke above it. Now, when we were talking the other day, it was actually below it. But look where we are. We're pretty much
this bar here would have been interesting.
That's the one. Yeah, that was the one he was looking at. Now we have just broken above it, but we're only just. And I would say that there's
still at this level, still rejected this level. Yeah.
Yeah. So there's a few sort of things that suggest that we could be now. The Kiwi Swiss as well has had a bit of a run, and ultimately, you consider this on a weekly chart. This is in a downtrend, pretty strong one as well. Mm-hmm. It's a difficult one because it's at the lower end. If when you look at those longer term time frames, it's at the lower end of what looks like a support zone. So I don't love it for holding on to. But I wonder whether we might get a bit of a reaction today and maybe just come back down to the monthly pivot. Now that's really where the position would need to be. Now, if you got on the daily, if you got in on that daily pivot, you go back to the hourly. You get in on the daily pivot with a stop at the highs, and aim for the monthly pivot. That's to me that's a bit more worthwhile than the CAD Swiss. That gives you a 2-to-1. So that at least that's something palatable. And ultimately, with all this stuff, certainly from my perspective, you can have the best trade set up in the world, but if you've got no value in it, because the actual value of the trade, the price that you're getting in at, if that doesn't match some kind of odds against trade, then it negates the attractive aspect of the trade. So I'm Swissy Kiwi Swiss could go down from here, but I'm not interested in that. I'm interested in getting enough capital with my risk to reward to make it worthwhile, and I just don't see it.
Fair enough. Fortunately, we're all different, and therefore we won't all be doing the same thing, and therefore we can take advantage of what other people are doing if we get it right, of course. So that's what trading is all about. We've got to be on the right side of the equation. One thing that Danny has asked, and Danny, I will confess to being absolutely blindsided by the geopolitical situation. What is the geopolitical situation between Canada and India?
Oh yeah, well, Canada have called India out.
Have they?
I didn't. Yeah, I don't really know what the story is, and it was the problem with sort of like some of these headlines I find is it straight away I look at the news source. You know, I look at where the news is kind of like being reported from, and if I don't particularly trust where because they talk a lot of fluff, then I won't read the article. I'll just read the headline. And I did see that headline that Canada have called out India. I'm not sure the details of the story because I saw it on from a news source that I don't tend to trust. So I think we probably need to kind of have a look into that. But I find the news stories that are have a bit more gravitas are the ones that are reported across the board. You know, you'll see sort of like some of the kind of tin pot ones that you can hardly, you know, very rarely trust sort of reporting in it. But then also the respectable ones are talking about it as well. I haven't seen it across the board, and that's why I didn't click into the story. So Danny might need to fill us in on the details of that. But I did see the headline.
Well, Danny's saying both have recalled their diplomats, and it's concerning the assassination of the exiled Sikh leader.
Okay. Oh, right. Well, I mean, it's, you know, to recall your diplomats, that does sort of suggests, you know, some genuine tension.
Well, yeah, but what are they planning on doing? It's just does anybody care that they've recalled their diplomats? They're not going to.
I think you made the relevant
going to
point.
war.
No, I think you made the relevant point, which is why, in a way, it's a bit of a non-story when you're kind of looking at how, you know, does that affect anything to do with markets? Not really. You know, you're absolutely right. It's just a bit of a, it's a story that probably sort of journalists are constantly scrabbling for stories. That, you know, that there are
yes,
stories out there.
They get paid to put pen. Well, it used to be pen to paper. These days, it's keyboard warriors, but that's what they get paid to do, right? Yeah. So they've got to come up with something.
They've got to come up with something, yeah. And most of the stuff inevitably is just going to be complete rubbish and completely useless. So I that's the way I kind of see the story. Really, it's sort of, it just seems like a bit of a useless kind of story, and it doesn't really carry much weight with me. So
I guess the question would be, what sort of trade situation is there with Canada and India? I assume it's net positive Canada with resources and
I don't
commodities.
know, mate, actually. Yeah, mate, possibly. I mean, India have kind of got their own kind of booming economy, and I'm not so sure, but even still, even with that, would India and Canada really have a trade dispute over this? Yeah, possibly.
Well, Danny, that's where we're going at the moment. Yes. I don't know what their trade situation is, frankly, but I imagine India may buy some oil off Canada and other resources. I don't know, but it's a great question. And if that is a serious situation and the trade situation is, I don't know, skewed to one way or the other, then I guess it could have a possible repercussion. So I guess the short answer is I don't know, mate.
Yeah. Yeah. Well, I mean, when it comes down to trades today, with the moves that we've had yesterday, I suspect it might be a little bit trickier. Even though I do like your Euro
Kiwi.
Euro Q. I do like that as a long. I'm with you on that. But I suppose maybe the Euro Kiwi is better than the Swissy purely because we've got that data about to be released. So I'll be watching that one. I think sort of like trying to get after the monthly pivot, I think is a relevant target. So if you can kind of get enough value there, I think it is there. But yesterday's announcement from the Fed was the main one, and I wonder whether we're almost kind of shoveling away some of the shrapnel while can't we get some calm to kind of make some new decisions, which could make today a bit more of a challenge. global equities seem to be, under a lot of pressure, but the FTSE wasn't, and I find that quite interesting that that the FTSE hasn't really moved. Now it could be because we've also got the Bank of England out today, and we're waiting for what the Bank of England statement is. They're likely to raise interest rates another 0.25%, so we get to 5.5% in the interest rate. But I don't think the tone is going to be quite as hawkish as the Fed. I think the tone is probably more likely to be quite dovish or neutral at best. And the reason for that is that the data sort of, apart from inflation, which is way too high. I mean, it's strange for me with the pound. The pound sold off after inflation came down 0.1%. From 6.8 to 6.7, and everybody's like, hooray. And maybe because they were expecting a raise in inflation, I don't know. I suspect that's the case, but 6.7%. But the big problem in the UK is you then compare that 6.7% on the inflation with the budget deficit. Budget deficit is just increasing and increasing and increasing. So that means that the borrowing costs from the government are also going up while the interest rate goes up, which is a huge problem, a big problem. Big problem for the Bank of England because they're trying to kind of bring price stability back down again. Big problem for the government because they're paying more just to keep the country moving. And the collision is obvious. There's no way that they're going to avoid a collision. There will be a collision, and I guess that's why the Bank of England, they're just hoping. That's all they're doing. They're working on hopium. They don't want to raise interest rates, but they're doing it because they have to, and we all know it. The Fed are comfortable. Their economy is seeing interest rates as inflation data more around that 3% mark. I know it's a bit higher, but it's around about that 3% mark. The economy is still chugging along quite nicely. Decent labour market, and just metrics that suggest that they are robust. So the situation in America, even though inflation is lower, they're more comfortable to be hawkish. It's really not an enviable position for the BOE. High inflation and an economy which is just getting battered, and borrowing costs, of course, going up, and high borrowing. It's just a mess, mate. It really is a mess. But
and haven't we seen it in the pound? Man, it's suffered, doesn't it?
Yeah. It's been suckered, totally suckered. So yeah, not an attractive or decent position, really. Not a good position for the UK, and not a great position for the pound. For so long the pound was kind of the poster child, really, of currencies because of the inflation data. And now, I mean, we knew that inflation data would affect it when the inflation data came down, but it's not dropping like a stone by any stretch. It's hardly coming down at all. It's edging very, very slowly lower. But a weak economy. I suppose that will fix it in the end as well. That the lack of demand will ultimately kind of do the thing. Oh, there you go. There's the CAD Swiss.
Yeah, they're selling into the news now, which you would expect on your analysis. You would have to agree with that.
Yeah, 13 minutes away. Yeah, absolutely.
Isn't it 1 minute away?
Oh, sorry, might be. Yeah, I might need to refresh.
That's why I'm looking at it. See how we go. See if I made the right decision or the wrong decision. Tell you what I would do if we did get a boost. I would get out of this if it got anywhere near here.
Yeah. It's one of those, mate. If your stop holds, then, as I say, I totally agree with your analysis of where it's going. Totally agree with it. I mean, it's kind of, it's the obvious magnet, isn't it?
Oh, absolutely. I mean, we've been looking at that for quite some time.
Right, let's have a look at this then. So we got 47, 10 seconds. Let's have a look at this and see what gives.
See if we can get lucky, and it will be luck.
Cool. They've left it on hold.
Yeah, I'm going to say, I guess they didn't raise interest rates.
Goodness me, 1.75%.
All right, I'm going to look to get out of this if it gets up there. Looks like it's just going to settle in the middle, I think.
Well, no, I don't know, mate. I would be holding on to this because it might well settle in the middle. But at 1.75%, the only thing that can change this now is the statement.
Mm-hmm.
You would
we
think.
shall see.
Okay, so let's have a look at the Kiwi Swiss and see what that's done.
Tell you what I would do is if they're going to reverse this emotive move, then I think I can move my stop loss straight away.
Undoubtedly, that grabs you a little bit more than you would have had, and it still gives you the ability to kind of stay in that.
So I can go up to there, 66.54. So that's another 25 pips. Why not?
Nice work. That is brilliant. So you had a stronger stomach than I did there, mate.
Well, I had trailed and stop up, so I worked it out. I was willing to risk. I think it was about 25 pips to get 30 pips to get 95.
Yeah.
So that makes sense to me.
Yeah. I think that's a great trade, and it does look like that magnet is going to get price should get drawn into that magnet. There's enough there.
See how we go. What else is going on around the place? Great call on the Nasdaq, right?
Oh yeah, I mean the Nasdaq's been an absolute beast. Because obviously kind of I've been calling a Nasdaq short for a while with that head and shoulders pattern, which started to get a little bit long in the tooth, but it is now playing out, and I would suspect it's coming right the way down to that second dotted line you've got, the middle dotted line. That looks like the neckline. Yeah. That looks like the neckline. The big problem for the Nasdaq or for Nasdaq bulls is the weekly. Because the weekly's kind of got this when you kind of look at the weekly, it took off consecutively over the course of around about 6 weeks, and there is a bit of a price gap, if you like, where the bulls managed to kind of grab in, but the bears weren't able to kind of retest any levels. And I wonder with the Nasdaq whether we might well see a genuine move down now, and we come down. I mean, even from this point, I wonder whether there's another 10% drop.
This was a beautiful little candle on Monday. Absolutely gorgeous.
Yeah, it was, wasn't it? Yeah.
Yep. They had to get your stop loss up here, though. You couldn't have put your stop loss here. But even so, stop loss there. Risking what? 158 to get at the moment. 1.5 to 1 already. Nice little trade that.
Yeah, really good. So
where do you think this is going?
Well, when you look at that, mate, I mean, there's kind of that obvious level. You're about 3 to the right away from that support zone. That little hump. If you go 3 candles to the left, or 4 candles to the left.
Here.
Yeah, there. Yeah, that little hump is, and the reason I think that hump is really interesting is because of the consecutive weeks of upside. That really was the breakout level, and it hasn't come back to that particular point.
It hasn't, no.
So I'm looking at that and thinking, okay, well, there's a 10% drop in this on a technical basis. There's a 10% drop in this that could come into play. It's interesting how things have really shifted. I think that's the key with the Nasdaq, really, because obviously the real emotive move that we had to the upside, a lot of that was based on the AI story, and the AI story hasn't really gone away. I think this is just now sort of to do with the Fed, and it's to do with the fact that interest rates will be higher for longer, which I don't know what investors have been listening to, but the Jerome Powell's been saying that for a long time. I don't think really too many of us expected a dip in interest rates, but I thought a pause for a while might be probably the state of play, and it seems that investors have got spooked that they're not going to lower interest rates at a fast pace, but there's no need to. The economic data suggests that the economy is robust enough to handle where we are, and I wonder whether we might just kind of stick with that, and stick with where we are. So I wouldn't be that surprised to see the Nasdaq come down 10%, but as I say, the AI story hasn't gone away, and after that 10% flush out, I think the Nasdaq rallies again. I think that we're just kind of waiting for some decent price points to be seen, and then we go back to the upside. So this is a particularly negative period for the Nasdaq. Last 2 weeks of September into October, it's 60% of the time over the last 25 years it's done this. It's just moved lower into the end of the month. The Fed have said what they're going to say, and that's negative for the Nasdaq. So the evidence was building for a sell-off, and it's at this stage it's playing out, and I wouldn't expect anything but a sell-off into the end of the month now.
Well, we finally reached the high of my range on the dollar.
Yeah.
And it's now that I'm keen to look for shorts. So what does that mean? Does it mean buy the euro? Does it mean buy anything against the dollar? Is that going to be gold?
Well, I was going to say, mate, I think you should have a good look at gold. I would have been quite happy to sort of say silver, but silver's going to be problematic if there is some global reduction in production. But I think have a good look at gold. I got into gold on you see that bar down there, that little pin bar, right along that trend line there. I got into gold there a few days ago, but I closed the position at the monthly pivot. And the reason I closed the position is there is a trend line from above as well. Yeah, along there, exactly. Yeah, and we know how gold does respect prices. I would look at this one. I think this one's an interesting one. I think if we are going to see some dollar weakness, gold is not only the one to follow, but I think it could be the one to follow quite significantly. I think this really could take off. Let
me point something out to you.
Yeah.
Where's my little dissolver revolver? Where is the bloody thing? That could be it. Every time, that's not it. Sorry, I'll get the right tool here. Try circle. Every time we see a key reversal bar on this, you never get negative.
What do you mean we never get negative?
The high is never taken out.
Yeah.
When I say never,
yeah.
There's no such thing in trading as never.
Yeah.
And look what we've got.
Yeah.
So that would stop me from going long at the moment.
Yeah. I guess. Well, I suppose it's going to happen eventually, though, right? I mean, it's
of course it does happen eventually. Yes, by all means it does. But the structure's also telling me that we're going back to that trend line
down the bottom.
Yeah, we're going back here.
Yeah.
It's like a toothpaste tube, right?
Yeah. Eventually, look at that. I mean, there's a squeeze on there, isn't there?
Eventually, it squeezes out.
Yeah.
And picking that time, of course, is the art of trading structures.
Yeah.
But at the moment, I'm fancying we're going that way. I can't trade that right now because it's a guesswork. Well, it's better than guesswork. but it's still hypothetical until we get something that comes back here, maybe even to the trend line, and fails to take that high. Once that happens, then I can trade it down to here, but not yet. And I'm not saying that that's a bad trade. If you trade single bar reversals, then by all means. I find that very difficult to trade single bar reversals.
Yeah. Yeah. Well, and also,
shot up, Danny.
Would you do that anyway if you've got this kind of like opinion that the dollar's going to sell off? Would you really be that keen to be trading this one short?
Same applies.
Yeah.
Not until the dollar tells me what it's going to do.
Yeah.
So, and they're both at key levels. Well, this one isn't at a key level actually, but the dollar is. The dollar is going to tell me what happens with this one, I think. Go back to it. The dollar breaks out of here and retests it. Then gold short is on. It's going to be the reverse, right? Gold this way, then I can trade it. Dollar this way, then I can trade it.
Yeah.
But what I suspect will happen here is exactly what happened here. We'll get outside here, then we'll come back underneath. So it does give room for gold to get down to here, perhaps, if that makes sense.
Yes. Yeah.
So that's what's in my head at the moment. Dollar may even get up to here.
Yeah. Yeah.
Tough to call. CAD Swissy's getting up there.
Yeah, you look at that. Yeah, that CAD Swiss is great.
Now, I want to look at pound Swissy. Danny has said pound Swissy has suddenly shot up. The news. Swissy didn't raise their rates. That would help that. I've been looking at pound Swissy forever. Oh, look at Kiwi Swissy. Oh my God. Pound Swissy.
Glad we didn't say that one, mate.
Yes.
Well, this is the thing, isn't it? And this is the thing. You know, I've been doing some analysis on news trading actually recently, and if you're able to get in on a news bar, the results are incredible. You know, that you get the odd 40 to 1 over a very a relatively short period of time. But it's if you look at the spreads, I mean, I was really having a good look at those spreads.
That's the killer.
That's the killer. That's the killer. Yeah. You look at the spread. You think about the psychological equity that you're having to spend as well. So yeah, I'm putting together a little course about how you trade the news, how you navigate the news. You know, looking at that first bar and then looking at the subsequent move, looking at the bar, looking at the moves going in. And seeing whether there's a thread that we can then take advantage of. So the news trading is sort of something where it's quite popular and actually quite cool, because obviously you can get a relatively quick reaction. Lots of people don't want to wait for their trades to kind of permeate and hold on to them for days on end. But obviously news trades, you look at that. I mean, that's gone, isn't it?
Would have been shocking if you had an entry there and a stop loss there, wouldn't it? But the problem is, if you weren't in the market, your entry is likely to be here.
Yeah.
That's the problem. And overcoming that, there's only one way I know of to overcome that, and that's to be in the market before the news.
Undoubtedly. Yeah, it's got to be the way. And I don't like, as I said, when we were sort of looking at that, trading, I don't mind getting in before and getting some movement before. Not the tiny little bit of movement that we had just before it, but yeah, a few days really, sort of before you actually get the news announcement. But if you were trading the Nasdaq yesterday, you would have got an advance. You would have got a chance to get in after the news and still make some really good money. So all that analysis is going to be presented when I do the course. And
Awesome.
after the course is done, I will share that with you, mate, as well.
Look forward to seeing what you come up with. I've had a crack at it over the years and have really had no success at it at all. So I'm really keen to see if you can come up with something. And Danny, back to your point, here's why pound Swissy is really, 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 really compelling. I'm going back to October. I think it's October. Yes, October 2022. So 1 year ago, less 1 month. And this bar here, which was on the back of this reversal bar here, has not been breached in any way, shape, or form since. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Now at 11 months, we've been inside this bullish engulfing bar, if you like, or call it whatever you want to call it. But it's also on the back of that reversal bar. But not only that, we've never been lower than this on this chart, right? This is as low as we have been. So for that reason, I believe that at some stage this will break out. And when it does, it's just going to go, whoa, just like you saw the news then, but on a weekly chart maybe. So my thesis is whenever it gets to the bottom of the range, look for entries towards the top of the range and just don't worry about coming back the other way at this moment. But just keep trying to do that, because look at every time it hits the bottom here, it just comes off it. Getting the opportunity to trade it is the key. And when this happens and this happens, it's very, very tough to do. And if you also have a look at the situation, Ash spoke about it earlier, situation in England is not good. So the pound is under extreme pressure. So I think that my thesis holds. Every time it gets to the bottom, I want to trade it long and leave something on the table in case it does go, because when it does go, goodness knows where it goes to. It goes to here in the first instance. And say you got in on a, I don't know, even 100 pip candle, you know, you can pick up 600-700 pips real easy, in my opinion, once it does go, and maybe even double that, triple that. You know, there's lots of targets up here, way, way up here. So I've been trying to find that for a long, long time. But same applies to CAD Swiss. We've tried to get into this for a long, long time, and finally it's happened. It will happen with pound Swiss. I don't know if it's going to be next month, next week, next year. Don't know. But it is still in a downtrend, Danny, 100%. So trading it is very, very difficult. But it's not so difficult if you recognize the structure and are prepared to trade long off a higher low. That works. Very, very messy, however. Picking your moment is everything. Impossible to pick that, of course. And that's what I mean. It's very, very tough sometimes to get into it because it just goes. And that's what will happen if it ever breaks out, in my opinion. Not if, but when. I could be 97, but it will happen, in my opinion. What else is happening, mate? Anything?
Well, obviously we got the BOE out later on, so I think the fireworks will continue, and I think it's going to be one of those days, isn't it, where it just kind of like goes sleepy, 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 then bang, we just kind of get the numbers that change the market. Interestingly, I don't think the BOE's interest rate decision is the real event of the day. I think the event of the day are the initial jobless claims from the United States. And the reason for that is because the move yesterday, I think, may well be a bit of an overreaction. The moves that we've seen with the dollar, everything sold off against the dollar. We saw gold sell off not that much, which is why I quite like gold for some upside. But gold didn't sell off that much. But, you know, just about everything else We saw the pound tank, we saw the euro tank, even the CAD. That has been one of the stronger currencies, just didn't do very well. But I wonder whether those initial jobless claims coming out may well move the dollar in the opposite direction. Just because just to kind of like close some of that overreaction up a little bit. But it does depend on how those numbers come out. Eventually, numbers from the US are going to go in the opposite direction. And actually, Jerome Powell even said yesterday that the case for the soft landing is still very much up in the air. And if that is the case, that the soft landing is up in the air, then that would suggest that we are going to start getting some poor economic numbers. But that could well do two things. It could be twofold. Firstly, you could be looking at currencies against the dollar rallying, for the rest of the day, and maybe sort of for the rest of the week as the dollar retraces, as it's at the top of your box there. And secondly, it could actually sort of boost the Nasdaq up a little bit. It had a pretty bad sell-off, and I don't think the Nasdaq's coming down in one huge hit. I think there's a decent chance we do get a 10% correction with the Nasdaq, but I also think that we could get a little bit of a move back to the upside to test where it came from yesterday, or attempt to test where it came from yesterday. So the initial jobless numbers are going to be pretty key. And do we like the level it's at now? It's not bad, is it? It's not amazing. It's not that clear.
No.
But I think maybe a little rally into the numbers. I think there's some opportunities today, mate. Still, I think there's still opportunities actually against the dollar. Going into that news event and then see what happens. But
how about the Aussie?
I think the Aussie is a bit untouchable. I wouldn't want to go near it anymore. I did like the Aussie, and I like the Aussie when the narrative was to do with global growth, and I particularly like the Aussie CAD actually. But all of a sudden, with what happened yesterday and the reaction to what happened yesterday now in play, the Aussie to me looks less attractive. The price suggests upside. You'd be looking for upside in the Aussie, but yesterday's announcement would suggest some global weakness, and that doesn't favour the Aussie. So not that keen. I quite like your call on the yen.
Which one?
Well, you were saying about the fact that there's going to be maybe some interest rate move from the yen, and if that was to happen, then the yen will do very, very well. And it's really the currency that is probably waiting to have its own moment in the sun. It might be very short-lived, but I think it might be the currency that we should we could maybe focus on again. It's a difficult one, isn't it, the yen? But
look, if they did go to zero tomorrow,
yeah.
You'd want to be on board because it would rally like hell.
Yeah.
Because of where it's been. It's been under enormous for the longest time. That's a monthly chart I'm looking at. December 2020 had a big correction, and now we're back up there. This is actually poised to dollar yen, that is, to sell off. But again, pursuant to my dollar index scenario, I think we're once again got two key levels. One there, one there. And we're nearly to this one. Maybe it gets there today.
Yeah.
And then tomorrow, maybe. But that's entirely dependent on the BOJ going to zero. Yeah.
Do you know, mate? I'm sort of looking at the market. I've been trying to find some positions I could get in, and to be honest, every time I've looked and taken my eyes off it, the position opportunity has gone. The Swissy wasn't really good value, and that's the only reason I didn't actually have a losing trade today, because I would have been in the wrong area. But but I'm sort of looking at it, and I'm wondering whether it's a bit of a movie today, and it's a bit of a sit back and watch the market and let things settle down. We've had a slew of central banks this week. and they continue with what we got with the BOE later today. I wonder whether we need just a bit of settling down and maybe to the US session could be something that we could take on board, because but by that time we have had all the central banks, or maybe even as late as tomorrow we're really kind of looking to see if we can get into something which is just a bit calmer. Lots of volatility and nervousness out there right now.
So now my odds have changed dramatically. I've now got a risk of 60 pips to get 20 or 40. So I'm now odds on.
Yeah.
Now would be a good time to exit.
I don't see why not. I do not see why not. It's going to be a grind up, isn't it? And actually, you're going to look at the chart and be frustrated that you didn't get those extra few pips. But by the same token,
I'm really not.
Well, if you're not, I would take it, mate, because now you can go wind a clock. You've got the money in the bank. It was a great trade.
Yeah.
And and we fulfilled our statement that we've got no business being traders unless we take those trades, and we took the trade, and we've kind of all got a different area that we're willing to stomach. And yeah, I mean, look, it's close, isn't it? It's pretty close, that area, and it has paused a bit now.
But like I said, I'm now risking 60 pips to get 20.
Yeah.
Doesn't make sense.
No.
Doesn't make sense. Right, we're out.
Yeah. Yeah, pretty explosive, isn't it? That move up.
Done.
Nice work, mate. Brilliant stuff. Really pleased with that one.
Yeah, look, I don't think it's done by any stretch.
No, I don't either. But it does need to come back.
It's extremely overbought. Extremely overbought.
And that's the big problem with it. And actually, I think there's also a case to be made to say that upper trend line that you've got there. If you tighten that up a little bit, bring the top of that line down a little bit. You can stay on the daily, yeah. That can pretty much stay where it is, yeah. Now bring the other end down and get the closes. You see the closing points there. That's where we are.
Yeah, we're bang on it.
You may well have picked the zone there, because and even raising that lower one up to kind of match the open of that green bar at the bottom there. Yeah, that does suggest that could well be the range. That might be where we are. So I think you've taken profit in as good an area as any. Whether it's the right one, nobody ever knows. But that seems to be as good as area as any, and I think you've done a great job.
I don't think it'll miss by too much. I'll put it that way.
No, I don't think it will either.
As you're saying, it's nearly 1 o'clock. It is 1 o'clock.
And now you're really going to enjoy it, mate.
Suffering catfish.
Yeah. I'll tell you what.
I'm going to have a look at euro dollar, and I'm going to have a look at gold before we go.
Okay.
Gold, we've got this breakout trade that hasn't triggered. We're bang in the middle of the range. There's nothing that can drive this today, is there, really?
Nothing that can what?
Drive gold versus the dollar today.
The jobless numbers.
What do we got?
Yeah.
The claimant count or whatever it is.
Jobless claims.
That never does anything.
I think it will. I think it will.
Well, they said as much in the statement, didn't they? Yeah.
Yeah, exactly. They knitted it in yesterday. They're data dependent, so every single data point will now be watched, particularly because of the reaction yesterday. As I said, for every reaction is a counter reaction. It doesn't mean the counter reaction will be today, but they are going to be scrutinizing everything. You see weak jobless figures in the US suggesting that the jobless claims are going up, then gold rallies and the NASDAQ rally. They'd be the two. Obviously, other things will as well, but they'd be the two that I'd be watching.
Cool. Okay, we'll leave this on then. That's hours away, of course, but we'll leave it on and see if they buy or sell into it. If they're in the middle when it happens, happy days, because we should get a good result out of that. Euro versus the dollar. Righto, let's have a look and see if our edge has been taken away from us today. No, it hasn't. That's pretty cool. It's also pretty cool that this breakout area hasn't been retested. I like this. Just got to find a way in. Okay. There's no way in for me at the moment. I don't think anyway. Let me go a bit wider. Oh, it's a real stretch. But let's do it. Okay, so I want to pull back to this line here. Okay. I'll give this one more candle, or you could switch to an hourly. Come on. Either the 30-minute or the hourly. So we're aiming for these pivots, right? Got a nice liquidity grab down here, like that. So I want a bearish bar here. I want someone to start selling euros. Anybody in the room has got a truckload of money. If they want to start selling euros, that'd be good. So I can buy it up when it does pull back. So I'm looking to, let's say, enter here. No, I don't want to enter here because that's the high of the day. Shucks. All right, it's got to happen like this if I'm to trade it. I won't trade into the high of the day, which is there. So I need this candle, this candle, to take that out, then pull back. Higher risk entry there, target there. Lower risk entry there, same target. That will be exactly what I'd want to see on euro versus the dollar today. Let's see how it goes. So the edge is still there. We've still got an untested pivot here. In fact, we've got two pivots today sandwiched together, as we did yesterday and the day before. And the only thing that moved it from there was, of course, the Fed. They bought into the Fed announcement and got shat on big time. But I like this. I like the fact that we've dipped below here and now we've come back above it. A retest here looks really interesting to me. The other way, of course, if this candle is the pullback candle, and it could well be that that's the case, you can still enter here or wherever that closes, but get safe when you hit that level because it is the high of the day and euro dollar does respect that early on. So be aware of it. And that is me for the day and the week.
Brilliant stuff, mate. Brilliant stuff. Well done. We'll be back, of course, on Monday, and we'll see if the market has settled down a bit by then. I suspect it will have done, and I think that if there is a rally, incidentally, I think if there is a rally in for the Nasdaq, maybe into the jobs numbers, maybe after the jobs numbers, I think it's actually another opportunity to sell it.
Sell the rallies.
Yeah. I think it's a sell the rally scenario. So I think there's going to be maybe an opportunity this afternoon or later today. But right now, this market needs just to calm down a little bit and a bit of settling down.
We can go back to Euro Kiwi, which I want to do. Euro Kiwi. How significant is that red line? Yeah, it's significant. Yeah, it is significant. What a bugger. It means I'd have to trade into it at the moment, which I don't want to do. So I'd need price to come back here somewhere and give me a higher low based on this bottom or this reversal bar. Somewhere in here would be good. Unfortunately, I couldn't trade it here because the risk is too great. It could easily bounce off this and take us. So I think it's a trade if you can find a way in. I really do. And I think anywhere up here is a good target area in the first instance and top of your range in the second instance. So might be in front of the chart. So who am I kidding? But if it sets up in the morning when I wake up, then I would look to trade that long. Let's see. Right, let's get out of here, mate.
Cool, man. All right, buddy.
Have a good weekend.
Yeah, you have a good weekend too, mate. Yeah, we'll come back Monday and see if we can find something else. But great week, well done, mate. That was a great trade on the CAD Swiss.
Well, we got lucky on the news, but we had the foundations in there, so all good.
Yeah, good stuff. Have a great weekend to everyone else as well. As I say, we'll be back on Monday to do it again. Thanks so much for the questions and getting involved. It does kind of help us, and it's great to kind of do some analysis all together. That's what it's always about, and it always will be about. So stay safe. Yeah, that's why we're here. But stay safe in the market, guys. Don't dive in just because you're really keen to trade. Really have a good look at stuff and scrutinize everything that you possibly can. There's always going to be a trade eventually. It doesn't take that long. Might need to wait a session. Might need to wait an hour. You might even need to wait a few days, but it doesn't matter. I think that there's always a really good scream out trade, and we'll see if we can find another CAD Swiss next week. So Jeff, get everybody going again.
That'd be nice. See how we go. Thank you, Danny. Not nice to be divers. Well, it depends on what you're diving for, mate, of course. Have a great weekend, everyone. Thank you for being our trading buddies, and we'll see you on Monday. Bye-bye for now. Where's the end button? It's gone. I could be here for half an hour.
Bye, mate.